Coin traders, Algo fam, how we doing? Looking at Algorand ALGO on that ticker. Made a fun tweet earlier talking about how we were seeing Algorand up over 120% in 2 weeks. So from the bottom here around 10.5 cents all the way up to where we actually had right now our current high, where it looks like we're starting to pull back a little bit. 125% gain here all the way up to just shy of 24 cents. So yeah, we do talk a lot about Algo over on Twitter or X at coin_trades. Definitely drop me a follow if you're not just yet. Can chat about all things Algo over on Twitter or X. Now, I really want to start talking about this chart because we're starting to see a little bit of topping indicators, but obviously one of the things that we need to look at first, and that's always key when we do talk about potentially having a pullback, is looking at the shorter term charts first. So for example, right now, still overall maintaining an uptrend on the 15-minute, the 1 hour, the 4 hour. You get the picture right now. So really, we're going to be looking specifically at the 1 hour right now. And if this trend ultimately does end up breaking, then likely in that instance, we will say that the trend high for this daily is going to be in, and we will be looking for a pullback. We know that right now on the longer term, there is a little bit of topping indicators, and specifically we're looking at more or less a decrease in overall bullish pumping volume, yet prices still have been rallying higher and higher and higher despite this tapering off volume. So typically what this does signal is that the bears are starting to step back in slowly, and that a lot of the buying is starting to settle off. So once we do see buying pretty much start to taper off, that's when we do get a lot of the selling start to come in. And in that instance, because there's not a lot of buying happening anymore, we do see the prices just pretty much eat up the order book on the downside, and that's what does cause the price to slip. But that's just a normal market retracement. It's just a matter of noticing these type of signals. The next thing too that we do look at is the relative strength index, the RSI. And we have been overextended above the 70 line here, had a nice higher high coming in, but now we are starting to see a lower high, and especially that is coming with a higher high in price, getting a little bit of that divergence here. So knowing that we are starting to see momentum slowing down to the upside. So that's why we are going to keep our eyes on the shorter term trend. Once that does break, then we'll be looking at some downside targets. Right now, though, if we do actually go ahead and zoom out, plenty of downside targets to be looking at. Specifically, we are going to look at one of the big ones that we just broke here recently, coming in just under 20 cents, effectively about 20 cents. Typically on these type of pullbacks and retracements, we're going to see the first support level actually fail, and then we will be going down to some of the next support levels that we do have. So after that, we will be looking pretty much down at about 17 cents. Probably we'll find something in between this consolidation zone at about 18.5, because typically we do find in this overall heart line to be a very good resistance or supportive zone. In this case, because we have blown through it, we would expect actually to find a little bit more support in that instance, which is pretty much why we talk about having these areas consolidate and provide a little bit of price trading instead of just going directly past it, because then that does provide an opportunity for, once again, once we blow past it, to be that supportive guide to the upside, which hopefully we will actually maintain. Very realistic scenario though, and even if we look at a Fibonacci retracement, that does line up pretty well with what we're seeing. So from the bottom to the high here on the trend, we're actually looking at pretty much the center zone being right in between the 38.2, which is a great retracement level, as well as the 50% coming in at 17.23. So great opportunities for downside. I expect that by the time that actually would happen, we would have these exponential moving averages kicking up, like I said, probably consolidating and continuing on. We know that a lot of the rest of the crypto space is actually overextended, and one of the things we do have to be aware of is something that I actually highlighted over here on Twitter or X again, talking about how the ultra uber bullish moves always be cautious about them, because they do result in inevitable liquidation sell-offs. Typically, this does happen when we do get a little bit more euphoric, and there's a lot of optimism, so people do get greedy, and they do start actually having a lot of margin and a lot of leverage on different positions, and that's what does cause those liquidations and ultimately creates a lot of those dumps. Normal market movements, but obviously just be safe and just be prepared that in any big bullish upside move, we do have very big potential for some downside sharp actions as well. So I think with Algo right now, those are some very good downside targets if we do actually see the shorter term trend break and confirm a top for the longer term trend high right now. If in fact we do see the longer term trend actually, the lower support level break, we would be looking down to about 16 cents. Not necessarily impossible as well. And if we actually go ahead and pair it up with the Fibonacci retracement, then we are looking at pretty much that coming in about the 61.8, just above that. So right in target with a lot of those levels as well. Those are definitely very good targets to the downside that we look at. And historically, we have seen that those type of big movements do end up producing pretty significant retracements. So even coming in back to the previous trend high back in March, if we look at the top here, we're actually looking at a pullback percentage of about 32%. And so, for example, if we look at the Fibonacci retracement on this trend as well, that does lead to a pullback that does hit and target the 61.8%. So, for example, from the current top down to effectively that 16-cent mark would be about a 32% retracement. So not necessarily abnormal or that weird if we do end up seeing it. So that is a potential scenario as well. Obviously, with such big gains, we do see a lot of profit takings, especially in the altcoin space, where we don't have a lot of constant buying and a lot of constant holding because it is a lot of flipping and trading for some shorter term gains. So very, very normal market moves if in fact we do end up pulling back. Obviously, no one wants to see anything decrease in value, but just know that that is normal, sustainable, and healthy for a much bigger, longer term growth, because without that, we actually won't see that. And it's not as strong of a move because we won't actually confirm these previous supports or resistances as that new next level of big support. Now, the one thing we need to be aware of, and it's kind of good while we haven't actually changed trend on the shorter term just yet, is that looking at the weekly right now, if we go ahead and look at the 50-period EMA, right now we're looking on the current weekly, that coming in at 16.13 cents. So if we actually do see a sell-off down to that level, we would like it to be on a follow-on candle so we can have this be actually a nice bullish candle. So what that means is ideally, if we flip back over to the daily, we'd love to see this sit sideways a little bit before ultimately pulling back. So we want this to be a long, prolonged pullback, kind of more or less like a flag type pattern. And even if we do pull back about 30-32% on a flag type pattern, that's actually still a very good bullish chart setup. Allow these EMAs to come back up and then ultimately kick off in the upside direction once again. So that would be kind of a preferred than obviously over the next couple of days to just see a complete flush and dump. Because what that would mean is that over here on the weekly chart, we actually would be getting a pretty negative bearish candle. However, despite that, though, we do have plenty of these exponential moving averages as support. So there's another very strong support guide to the downside, in addition to those price levels that we do have. So this does mean a lot more likelihood of actually continuing the upside trend, confirming as support and being on our way once again. Because we have started to change the trend, blown through a lot of these resistive EMAs, we're still looking at a very, very good bullish sign. Just know that markets can't just continuously go up without having that ultimate inevitable sell-off or retracement, which is why we get these sort of soft seesaw patterns. So really right now, the big levels to be looking at are the previous trend low on this pullback, so about 20.5 cents. Below that, we are going to be looking, obviously the next downside below that's going to be extremely low, down about 18, just under it. But realistically, if we do end up breaking about 20 cents, we're going to have a level that we actually can't pretty much recover from, because in that instance, hourly RSIs, or excuse me, the hourly EMAs are going to actually be very, very, very resistive in that point due to how much we are actually below it. So if we actually look, for example, on this pullback, we weren't that far below the 50-period EMA, and it actually was pretty easy to reclaim these EMAs as support. So that's kind of why it's another essential task for the bulls to actually be able to not only defend this 50-period EMA, which would ideally prove valuable, but also to make sure that we defend this price level, because anything below that is going to essentially confirm a downtrend, because then we will be getting stuck up once again, not only a lower low, but then we will be getting stuck up again on these exponential moving averages, which pretty much confirms that we're going to be putting in a lower high at that point. So like we said, with a lot of the big patches of bullish buying slowing down here for the longer term, we know that we're going to be starting to slow down. And right now, really looking at defense of some of these longer term exponential moving averages. Right now, this is the 4-hour. Ultimately, you can see pretty much since coming off of the bottom here back on the 4th and 5th of November, right before this very nice upside Trump pump move, we are looking at maintaining and holding these exponential moving averages as support. And kind of what we look at in these type of trends is typically bouncing off the 50, and then we bounced off the 26. Now we already did test the 12 period as support. So if we do lose that, then it kind of works in reverse, where then we'll be looking at the 26 again, and then finally the 50 period below that. Now, if we do lose trend on the 4-hour, that's still going to be okay, but pretty much that is going to confirm that it's going to take a little bit longer to keep the upside momentum going. But the longer we do actually consolidate on some of the longer terms, the more positive direction we do have, and kind of the better upside potential we do have as a stronger move, not just kind of a short, euphoric, news-driven pump. But anyway, would love to hear everyone's thoughts, questions, comments, issues, disagreements, all that stuff down in the comment sections below. Or again, feel free to reach out over on X or Twitter at @coin_trades. With that, though, that is going to go ahead and wrap up the show for today on Algo. Hope everyone enjoyed. If you did, please hit the thumbs up, like, and subscribe if you have not done so just yet. And otherwise, take care, stay safe, everyone, and I will catch you back in the next video.